It's an honor. I have with me a successful entrepreneur. I think the whole industry is looking up to him. For sure, I can say also cheering for him. He's worked with Taj in the past, A.T. Kearney, I think, for some time. And then I think he said what will become India's latest public hotel company, and I would imagine one of the top 4 or 5 hotel companies in terms of market cap very soon. So Patu, almost 16 years for Lemon Tree, a public company or a soon-to-be listed company, amongst the top hotel public companies in India. What is your state of mind right now? I know you're sleepy, but other than that, what's your state of mind right now?
Well, it was very hectic. I think a couple of friends of mine went public 2 years ago, and they said, it's like having a baby. 9 months is gone. So I've been pregnant with possibility for 9 months. And, on 9th of April, coincidentally, we'll list. So I'm now quite relaxed, but I think what I realized is that the public markets and the kind of scrutiny you face is so different to private market, private investors. So I guess going forward, we'll have to be, I think, far more aware of what's happening.
Any lessons here?
Yeah, my lessons are, I found it very interesting that, there are such a diverse set of investors globally. So I did a roadshow, as you know, in the US, in Europe, in Middle East and Far East. And of course, a brief one in India. And I found that investors across the board have such different perspectives that whoever goes public at whichever time, he or she has to find the right set of investors. So for the hotel business, obviously, you want forward-thinking, forward-looking people who are willing to invest for at least 3 years. So you definitely don't want hedgies, as an example. And people who are also willing to bet on growth. Because the big issue I found is that a lot of investors, especially some in India, are very, past performance oriented. So they'll say your EBITDA was X. So your multiple is, 40x. But the fact is that every year the EBITDA grows at 70%. So 2 years forward, it's 12x, hypothetically.
Right.
I mean, I don't want to give, specific statements. So the long-only international investors go for that. But many people, many investors look back, not forward. So there's no premium for growth. There's no, they'll ask you about debt. Whereas I found it amazing that, we are actually relatively under-leveraged. But they said you have too high, your debt is too high. So you want growth, but you don't want debt. So, there is this, and I don't blame them. I think they don't have comparables. So the biggest problem I found in the mid-market space was that there is no peer comparison. And the only comparison is with the listed players who are, the top 2 listed players are really luxury plays.
Right.
So there was this issue.
Did anybody realize or ask you about the relationship between earnings multiple and a return on capital employed? Because, the two industry stalwarts who trade at high teens, early 20s EV/EBITDA multiple have inherently a low return on capital employed.
So I had an interesting experience on return on capital, and I found that, again, I found that the informed investor was very different to the uninformed investor, and I don't want to describe who are the informed and uninformed.
Can you take names of who were informed and who were not informed?
Everybody who invested with me was informed. So here is the third. I'll give you an example of Lemon Tree. So I read somewhere a return on capital is X. So let me take a number which is not the real number, 5%. But if you split it, it's sum of the parts. So we have 3 sets of hotels. We have hotels which are 2 years or older, where the return on capital is 14%. Then I have hotels which are 2 years or less, where the capital deployed is high because a hotel I built 10 years ago at 50 lakhs a key, that same hotel today is 1 crore a key, as you more than anybody else would know.
Right.
So I have 2 hotels, same size. One is earning, say, I invested, I'm just taking numbers, 100 crores and I'm earning 14 crores. The other hotel, which is the same size, is 200 crores because it costs twice as much. And it's earning 6 crores because it's not stable. So you add the two. The ROCE is 5%.
Right.
Now, The third is I've got another 200 crores in a third hotel which is under construction. Now what the uninformed investor does is he adds the 3 EBITDAs and divides it by the 3 investments, and your ROC is 3%. But the informed guy actually does a forward view. So this is the problem I've faced, I think.
So who has the more money, the informed guy or the uninformed guy?
Informed.
Informed guy?
But he gets higher returns too.
Okay.
So there are, I find, follow-ons and lead investors. So really, even my investment bankers told me that, go for the lead investors because they are market leaders. And that's how you look at it.
Okay, so one question, and I'm going to, go straight to a point which is very relevant. So, we have this room full of global hotel companies. They all expect India to be the engine for their, development pipeline. And here we have the largest hotel public company in India at about 16,000 odd crores, which is what, about $2 billion. So there is completely a mismatch of what the market expects from a scale perspective in India and what's the size of the current hotel public companies. Do you think that's going to change in future? Do you see an opportunity for much larger public hotel companies, which in a way is a true reflection of what a lot of our friends in this room come to India for?
So let me look at it from 3 or 4 different perspectives, and not in any order of priority. Firstly, if we look at global hotel companies, they've grown on 3 axes, X, Y, Z. X is price points, which is 1 star to 5 star. Y is geographies. Z is associated businesses. So typically a company would start, say, in the 4-star space in the US, saturate that market, growth slows down, then they look for the next growth. So they will then have a brand extension, move into 5 or 3 star, again saturate the US. Over time, then expand to Europe and so on. So they will then cover these 2 axes. And then after some time, when you've grown, you're still looking for new growth, you will move into associated brand extensions, like I would assume casinos or resorts, or, homestays, or vacation ownerships, or cruise liners, and so on. In India, for whatever reasons, the traditional companies were focused on luxury. And in India, a luxury company, I don't think, based on the demand that I sense exists here, even completely consolidated, would not be more than a few $1 billion, whatever that is. So where is the opportunity in India? My view, and that was actually the reason why I started Lemon Tree, was that in India there is enormous latent demand, but it's not being actualized. Now, if you compare us to the best example, which is China, China in the last 20 years has created about 22-23% of global supply, about 3.8 million rooms. One company alone, like China Lodging, which is a $10 billion market cap company, has 10% of that supply, 0.38 million rooms. And this is all economy rooms, okay? Right. And their game has been very simple. They have a franchise or a lease and convert model. Now, you cannot lease and convert in India because of local area regulations. So how do you grow in India? Okay, my theory is very simple. If there is some guy who can create adequate supply at say 1,500 to 3,000 rupees price point, which is where roughly China Lodging is, then there is space for 1 million rooms in India. Okay, so some of the aggregators are trying to do it. Everybody's trying it, but my problem is you cannot get service from those guys. There are 3 questions: the legality of the asset, the meeting of regulatory requirements, which is, are you paying minimum wages? And third is basic safety, which is fire safety and so on. So to organize that space legally and then take that entity public, I think is a huge challenge. So for me, I think the real issue is to become your own largest customer, which means you should become the largest developer of hotel assets in India if you want to succeed. I'm talking to you and to myself. Create the assets, find a vehicle to go asset light, which is sell it and lease it back in some form. So you need to operate across the entire value chain. So
the bigger issue is, I think, the grossly underwhelming financial returns have also dissuaded investors, entrepreneurs to really dream big about scalability. And do you think that suboptimal, underwhelming financial results or returns are market-driven, or do you think there are certain structural flaws in the industry which we can correct, improve the financial returns? Because only when you attract a large pool of capital at the right cost, both you and I suffer from very high expectation on returns because they see a high degree of risk also. Do you think there's some structural flaws in the way we've been running this business for decades which can be corrected for us to get better returns, attract more capital, grow the scale, become relevant?
So I assume you're talking mid-market because you operate also at luxury. So here's my view. So I think there's enormous supply, but it is latent. Enormous demand, but it's latent. So the key point is, how do you create the supply? Can you create supply at the right cost per room?
Right.
With the right leverage? So in the last 10 years, I think the real issue, at least for me, when we grew quite rapidly, was growing but maintaining a debt equity loan to value of 33%, which is 0.5:1 debt equity. And then timing it so that you could increase your debt when you have clear visibility on earnings, right, on cash flows. And I think what the other thing, by the way, people don't understand is that a hotel is an appreciating asset. Depreciation is a tax benefit. So what you really look for in a hotel is cash profit, which is PAT plus depreciation and not PAT. Okay, because your depreciation is high, your interest is high, so you look at cash profit. So anyway, coming back to what I see as the issues. So the first structural issue is in supply creation in and of itself. My theory is the more supply you create, the more demand, the more awareness, and therefore the higher utilization. So it's a little contrarian. Number two is, how do you create supply at the right price point? Because the Indian consumer wants every service that you can imagine at preferably no cost, okay? So you want to have a very high value for money offering. You don't want to trade off, and I'm talking about my business model, you don't want to trade off on location because there's an absence of enough public infrastructure and transport. You don't want to trade off on services the Indian customer demands it, the mid-market guy. So what do you trade off? You trade off on product. So can you offer an Indian customer and educate him that this small room with much smaller public spaces at half the price of, say, a 5-star is the right model, the right thing for him to consume? So that was my theory, and I found that it worked, and we got much higher utilization. So fundamentally, I think the real challenge is creation of supply at the right cost per room, in the right location, highly effective staff utilization ratios, which if you've gone through my RHP, you'll find I focused on. So you basically drive a revenue premium. Don't focus so much on food and other ancillary revenues. Sweat your asset, minimize your operating expense, offer a high value for money experience. And my theory is, then the only question is, how much supply can you create?
So I know you and I have spoken several times and about global versus local. And I know you've always complained. I always smile when you ask me about why do I only work with international brands. So leading from your the earlier question about how to make the business more relevant financially, is there a question in your mind about the fact that global brands tend to add a lot of these costs which are necessarily not being appreciated and paid for by the customer in the rates? And do you see a benefit or an advantage for homegrown brands to be able to cater to the customer? They're much closer to the demand, they're much closer to the mindset of the customer. Do you think that the local brands have an edge above the international brands when it comes to servicing the customer at a level which is profitable to the owner?
The short answer is yes, but the long answer is, I don't see domestic and global brands as competitors. My view is India is at such a nascent stage that it's actually a collaborative play. So to me, whether it's an international brand, a domestic brand, whether it's an aggregator, they're all creating awareness, trying to organize a market, and presumably trying to do the best for their various stakeholders. So on an overall basis, I think it's good everybody comes in. Now, you're coming specifically to the benefits of going international versus domestic. Now, international operators are by definition smart people who operate across multiple markets. And I think what they have to, and probably they already do recognize, are three things. First is that the Indian customer wants full service. So the import and cut and paste of a select service hotel will not work in India. That's at least my personal experience. Second is that their real responsibility is to the owner, and I think there is a play, and I'm personally mulling over it, which is to disrupt the traditional management and branding model with a shared pain model. So I'm saying, is it possible I go to 100 hotel owners in India and I say, here's my fee structure. I will charge you nothing if my return on capital for you is below this.
When can we have a discussion?
Sometime. But
I hope Neeraj Govil, Vivek Bhalla, they're all listening to this.
Yeah, so my point
the next
is,
time the discussion is fees beyond a certain return on capital employed. You know?
Yeah, I think there is a clear case for it, because you see, traditionally, let's talk simple math. If you look at fees, typically you take 1/6 to 1/7 of the fees of the profits of a hotel. So ideally, if you have 7 hotels you're managing, it's like owning one with 0 risk. The only risk is reputational, right, for underperformance. So now, if you are taking 1/7 or 1/6 of the cream, and I'm speaking now from an asset ownership perspective, then certainly you have to have some downside, okay? And there has to be upside, there has to be downside. So the broad mulling I have is that should I go and offer any asset owner a minimum expected return? And I top that up. But then I also take more, obviously, if I outperform. So that's one possibility, and it's like a quasi-lease model. That's one. The third point I was making broadly is that if you're highly value for money, your customer is highly value for money oriented, then it's your responsibility to yourself as a manager and to your asset owner that, you have to be lean costing, very lean in costing. So I'll give you a personal experience. We took over one hotel of an international brand, and I found that their operating expenses were 25% higher than ours on an apple-to-apple basis, and that 20% was advertising and sales promotion. And that is going to the brand, and that's going to the brand. Why should the owner pay for it? So, I have a view, and I think in India, if you want to succeed, you have to address these issues, because fundamentally the cost of product is so high.
Correct.
That, you have to give a return to that guy.
So, we've got about 7.5 minutes left. Let's talk about some people. So, I'd like to know 2-3 people who inspired you from times before Lemon Tree, and also ask you to do a bit of a crystal ball gazing and tell me, people in future who you think will lead the way. So, go to the past and see people who inspired you. Go to the future and tell me if you see any people who you think will change the way this industry is going to operate, right?
So you're talking about people who inspired me in the hotel business, or generally inspired me?
No, anywhere. Inspiration is not sectoral.
Well, my biggest inspiration is Mahatma Gandhi, actually. And
are you going to run some elections after being a public company?
Maybe, who knows?
Okay.
No, I think my inspiration has not been really in the corporate sector or anybody I've worked with. In bits and pieces, there have been obviously inspiring leaders that I've had the privilege to work with. But on an overall basis, I think, well, it's like an Oscar award speech, I want to thank my father, my mother. Well, they have inspired me. And what they have inspired me about is not really the hotel business, but about giving back. And what I'm, looking at in the next 10 years is also how organizations in India can contribute towards improving the quality of life of the underprivileged in India. And I think that that's a major focus for me. And I ask myself how I can leverage, not at a cost to other stakeholders, but how can I leverage Lemon Tree, which has 5,000 employees, which is doubling in 3 years to 10,000. How can I, use the organization to provide employment to unemployable people or uneducated people and so on. So that's my passion. And people who inspire me there are, interestingly, 2 people you would not imagine, and it's something they said. One is Warren Buffett, when he said that he was asked why is he the world's most successful investor, and he said, I'm a winner of the ovarian lottery. I was born to the right parents in the right place at the right time, and it really resonated with me, because there are 400 million Indians who have been born in the wrong place at the wrong time, not to the wrong parents. And then, of course, was what Winston Churchill said, that at 20 if you're at 20 you're not a communist, you have no heart, and if at 40 you're not a capitalist, you have no brains. And I think that I want to go back and just be a communist now.
So half the room is...
I can see that zapped you. You didn't expect this conversation.
So half the room is speculating your share price on 9th of April, and I know you won't talk about it. And the rest of the half of the room is trying to figure out, where is the ponytail?
So what's the question? The share price in the ponytail.
Ponytail. Share price you would not give me an answer on, right? So, you know, Lemon Tree, for some of you who don't know, had this clan culture of having a ponytail. And I don't see it now. And I was thinking maybe at that time it was a comet, you know, with that tail. And now it's become a sun, so there's no tail. So what's the story with the ponytail disappearing, you know?
No, the ponytail was when I started Lemon Tree, I wanted to basically build one hotel and retire. And so I grew a ponytail because when I was in college, I had a ponytail, and it was the best time of my life because I had no responsibilities, no accountability, and my dad was paying all the bills. So subconsciously, I wanted to go back there. And then a bunch of my colleagues said, let's make this a part of, we also want to grow it. So we made it a part of our brand standards, and all managers have ponytails.
Okay, so I think our time is running out, or probably has run out, but two questions before we end this. One is that if you were to be given a choice to be either a brand or an owner, what would you choose?
Oh, a brand? I think that's the highest rosary. Yeah.
You'll choose to be a brand rather than being an owner. Okay, and the last question actually is that if you were to give a piece of advice to the people here, what would that be? Whether it could be personal, it could be professional, it could be technical. What is the piece of advice that you have? Actually, I mean, you've got to share your success, Patu. You're talking about sharing your wealth, but before you share your wealth, you can definitely share the secrets of your success, you know.
I think that 15 years ago, it was a very irrational market. Most of the asset owners in India, so I'm talking business actually, were irrational investors. They built for ego reasons or for formalizing of capital or whatever reasons. So they were not really looking at returns. Now, fortunately, going forward, they are rational investors. You are the leader in that. And I expect supply will now auto-regulate, which means it will be linked to expectations of return. So I see that in the next 3 to 5 years, there will be an acute shortage of rooms in India. And therefore, repricing. What I found internationally, everybody asked me is this sector, when is it going to reprice? And I've been mulling over it. And, you know, I told you that this September, for the first time, Lemon Tree increased its prices by 14%. And there was no impact on occupancy. So I think, I don't know where it's missing, this desire. And I would recommend to any brand or manager that, guys, increase your prices because you owe it to the owner. And somebody has to take a stand. And why is it not happening? So this is not, you know, I don't want the competition commission to come and sit on my head. But I think that was the biggest question people asked me, that when are you guys going to have the, you know, when are you going to increase the prices?
Yeah, I mean, ask us as an institutional owner. I mean, we've been investing in brands and being sold like commodities. And I don't get this. And, you know, I was told several times that hotel is a perishable commodity, and therefore you got to sell your unsold inventory at the end of the day. What I didn't understand is that I only deal in the branded segment, so a brand cannot be a commodity. It cannot be just sold at any price at the end of the day, right? So
no, but we have commoditized it. In fact, the brands have commoditized it. And I think, okay, whatever were the reasons for the trauma of the hotel industry in the last 10 years, going forward, I think, you know, that there has to be some rationality. And even if you have to take a hit on occupancy, what's the big deal? The market is poised to turn, and therefore, you know, as brands, as operators, as managers, it's our duty to actually do this on a rational basis.
So, Patu, what's next? Are you tired? Are you exhausted? Are you exhilarated? Do you see it as a, like you said, you've just been through 9 months of maternity and now you're going to deliver a baby? What's next really?
Well, I want to have fun. Okay.
Are you not having fun so far?
No, I've had fun. That first phase is over. So the fun for me.
So last I calculated, you'll be worth a couple of $100 million, and so how else do you have fun, really?
Yeah,
now Ashish, you're talking like Mukesh Ambani. That's a byproduct, right?
No, it's not a byproduct. Okay. But I don't think it's a relevant metric. Frankly, it's just a number. What is important is, I think for me, is one is of course the social impact I want to focus on, and the second is. How do you create an ecosystem in India where you take all possible stakeholders, and I don't mean ownership, I mean alignment, and you, in some form, capture the travel and hospitality market in India. So this is a intellectual, internal debate I'm having in my mind. And I think if I can find a solution to that, it'll be quite exciting. It's not about making money, it's about the ecosystem.
Okay. Gentlemen, it's been a pleasure for me to talk to Patu. I think he needs a big round of applause, not for today's session, but what he has done to the industry in the last 16 years. I think we were waiting for a breath of fresh air, and I think the Lemon Tree listing, and to me, it doesn't matter at what price it gets listed, but the whole success of having created a public company in 16 years is inspiring, and I think it's only something that we can hope to follow. Patu, thank you so much.
Thank you. Thanks.
Thanks.
Thank you.